G'day folks, welcome back to another update for the S&P500 and the NASDAQ. Now both are turned bearish, showing on the charts. We'll go through those in a moment, showing especially with a bearish divergence. We're going to include some back testing, and before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos where we do a deeper dive into some trading strategies, and we also go through some of the finer details of what we talk about today. Now, in terms of the outlook, the US large cap market, as represented by the S&P, is showing softness in recent sessions as investors grapple with stretched valuations, weaker earnings, and lingering questions around interest rate policy. Meanwhile, the tech-heavy NASDAQ remains relatively supported by AI and tech themes, but faces headwinds from regulatory, funding, and global tech risk concerns. On the geopolitical and macro front, the global economy in November has headwinds with trade and export restrictions, fragmented policy responses, and geopolitical uncertainty weigh on market sentiment. In short, markets are being held up strong by themes, especially AI and tech, but the underlying risks of valuation, policy, and geopolitics are elevated. So I'll start off with the S&P first. On the weekly chart, you can see there the price is still just above that moving average range. Although notice we've got this bearish divergence, lower highs on the CCI versus higher highs on the price. And I've actually drawn a 23-38% Fibonacci retrace target. And if the price keeps dropping, we can expect the price as a minimum to get down to that level. More than 90% of the time it hits this 23-38% range. You could do a couple of things. You can actually just touch it and bounce, or it could actually consolidate before it decides where to go, or it can actually break right through. We can't really tell, and that's why we follow this CCI. At the moment, the CCI is bearish, with the price also coming down towards that moving average range on the weekly. Now, on the daily, likewise, we've got another bearish divergence. A bit hard to see on that one. Let me just expand that. That's pretty much a double top on the CCI. I can still consider that a bearish divergence if the price is moving a lot higher highs. And again, similar to the weekly, I've drawn a target range there, and that goes from that high down to that significant low before the divergence started, and that's a 23-38% range. So again, looks like it's heading that way. The CCI looks like it's still dropping. No sign of it a pullback yet. And we'll go to the 1 hour time frame as well to see if there's any micro moves. And on the 1 hour period, you can see there that's been in decline now for a number of days. The latest one with the price breaking through to the bottom, and that's why you always trade in the direction of the higher time frame. So you should not have been going long during this period, because again the daily was short. Let's go back there for a moment. That's in those few days there. The daily has been short according with the CCI. So never trade against the higher time frame trend. So you could have actually probably, if you're risk averse, not too risk averse, you probably could have taken that little trade there. But again, if you're holding on to it, that would have broken down quite sharply. So again, always go with the direction of the higher time frame. Now, if you were trading that, going short at the close of that candle, you'd be closing it out on that candle there when the CCI breaks into that moving average range. And that gives you an early exit, as opposed to waiting for the price to hit the moving average range. So in accordance with the daily chart, we would have started going short from that candle where the price breaks below the moving average range, but also more importantly, the CCI broke below as well. You could have, see that one there was the CCI broke below, and that could have had a couple of short trades in that little period on the 1 hour time frame. But again, I'd like to see that break a lot stronger to the downside, like it has so far here. And ideally, I want to see that price break with the moving averages start to turn down like they were here. So that's probably a bit too early to enter, but I'm just going to demonstrate the back testing from that point. So on the back test here for the 1 hour time period, based on the daily going short, you would have taken those little trades, again closing it out. A couple of things you could do here. You can actually, if you really want to just scalp, you can close it out when the CCI breaks into that moving average range at that point, near the bottom there. Wait for the price and the CCI to also break a new fresh breakout, and you could have entered another trade there. And more recently, as I said, you could have taken that little trade and closing it out on that candle. Or if you're following the larger time frame, as long as you're going in the direction of the daily, again looking at the moving averages at this level, you can let the price breathe and trade short during this little period, assuming the daily was in a short, and it wasn't at this point. Let it trade in a short position here as long as the CCI and the moving averages of the price are in a downswing. Closing it out whenever they start turning up, like especially at that point there. Notice there as well, you had a little bit of a bullish divergence. Going short again there. Both price and CCI moving averages are in a downswing. Closing it out on that little point there as well. And so on. Going short, closing it out, going short, closing it out. And here we have the NASDAQ on the weekly chart. So first off, you can see there we've got another bearish divergence, lower highs on the CCI versus higher highs on the price. I've drawn a target range there, and the way I've drawn that is drawing a Fibonacci from that high. We'll take it back to the significant low before that divergence started. Now why at that place and not, say for example there? Well, first of all, that's not before the divergence, or not even at that point there. What I want to see is the price break below these moving averages, and the moving averages started to turn down slightly at that point as well. Here, for example, the moving averages were still in an upswing. So I'd like to see a more significant low like that, or the previous point would have been at that level there. So in terms of a pullback on the weekly, you can see there as well, the price is heading towards that 23-38% range. The CCI is already broken in below the moving average range. So it's very likely going to hit that in the coming days, possibly. Now on the daily, again, it's hit this resistance and pulling back from our last video, and both the price and the CCI are broken below the moving averages, so taking bearish trades only. As well, there's no divergence because that high is actually higher than those points there. But if you, I suppose if you draw it from that point there, that is theoretically a, let's just do this. They've got to be obvious, so that high there is a bit lower than that high there, which is from the same point to that level there. So that's still a bearish divergence on the daily. And again, if I was to draw a Fibonacci retrace, looks like it may have already hit its target. Let's go from that high down to that low. Remember, that's, you take it before the divergence started, and it's actually just kissing that 23% range. Right, it's just touched it. Looks like it's going to fall further. We've got a bit of a bullish candle developing so far as we record, but at the moment still a bearish momentum. So if you're trading on the 1 hour time frame, taking short trades ideally from this area here when it starts breaking below the moving averages. Now in terms of the, let's go to the 1 hour time period first before we look at the back test. So similar to the S&P, you can see there the latest short trade would have been at that level there, and you would have closed it out on that candle with the CCI touching that moving average range. Or if you're trading with a wider trend, again going short when both CCI and price moving averages are in a downtrend, and closing it out when you see that moving averages started to turn up, so you would have closed it out there. Again, closing it out, entering another short position there, and wait, just let it run, I suppose, if you were more risk adverse. Let it run and wait for the moving averages on both the CCI and the price to turn up. The alternative to that as well is when you're going short here, for example, here you can see you would have got out at that point there. But notice here as well, if you're going short during this little period, you're noticing here a bullish divergence. A couple of bullish divergences showing in there, a couple of warnings, and you would have got out the very latest at that point there if you're going short at that point. So looking at the back test, going short according to the daily. Now, one thing to consider here as well, if you're going short at that point and then closing out according to that moving average range, you would have got caught with your slight loss if you were entered there and holding it at that point. But again, notice we had a bullish divergence here. So if you want to be really risk averse, you could have avoided taking that trade with that bullish divergence and waited for a new opportunity. More likely at this area here would have been better. You can see there the profitability was also rising. So that's a good example of what to look out for. Don't just automatically go for the moving averages in a downswing. Look out for any bullish, in this case, any bullish divergence. If you'd like to expand further and get some share trading ideas, why not subscribe to the Patreon page? And these are some trades we've taken since the 21st of September this year. These are all closed trades, so we don't hold these at the moment. But you can see there the total gain in percentage terms since the 21st September has been 12.48%. So to get access to that, there's the Patreon page, link in the description below. hit that like and subscribe button. Thanks for watching, and see you in our future update.